It was good, YouTube. Manana the Goat LLC. So we're back with another video. So I'm just quickly gonna jump straight to it. Um, if you guys are so confused, like for the first time viewers, if you guys are confused, my name is Chris Hendricks, the member of Manana the Goat LLC. So today is Sunday, the 14th. So it's like really late right now. So I'm just gonna jump straight to it. First chart that we have right now. So I'm just gonna analyze like five pairs, right? Nothing too much. But these are the pairs that we're gonna be looking at for the coming week. So these are probably gonna be our best performers per se in terms of like currency pairs. So the first one that we have right now is the British pound against Canadian dollar, right? Um, so the first thing that we normally do is figure out the structure. People might be confused, like, why aren't you starting the daily time frame or weekly or whatever? The thing is, we're not trying to swing for like months or whatever, right? So we're just gonna start with the 4 hour time frame. And the first thing that we have to do is figure out our structure. So for beginners, I'm just gonna highlight everything now, the current market. So you may agree this is the current market, right? Within the zone. So what I do first is get my structure, which consists of like a support and a resistance, uh, something like that, right? So that's the support, and we have our resistance here. So in terms of connecting your touches, usually when the structure is fully formed, I start with like the third touch or the last touch. So basically backwards. So through look something like that. Even that's not perfect, it's fine. So I zoom in. We're still in the 4 hour time frame. So right now we have figured out our structure and just hold on. So this is our structure right here. As you can see, we had a few touches on, we're gonna consider this as a touch, second touch, and the third touch. So usually in a ascending structure like this, um, what we look for is the price to, yo, that looks mad ugly. Hold on. Let me get my drawing straight. So we look for a rejection at the third touch, followed by like a correction so we can swing to the downside, right? So that's what we look for in an ascending structure like this one. And the opposite goes for like a descending structure. In a descending structure, you would uh definitely have, let me just illustrate it out, let me just show it. So you would have a descending structure like that. This is your support, your resistance of the structure. So usually we'll be eyeing the third touch, which has the highest probability, as many of you guys know. So once a rejection happens right there to the upside, what we're anticipating is the correction that's gonna follow, right? So it's the same concept, whether it's a descending structure, ascending structure. And what I mean by that, whether it's a bullish structure or a bearish structure. Okay, so now we have the rejection on the third touch, right? As you can see, the price rejected to the downside which is very clear. And from this point, we're just gonna scale down to the hourly time frame to see what really happened and what is basically forming. So you guys can see that, cool. This is our impulse to the downside. Here we have the market just going sideways, right? And that is by definition a correction. So what you do is usually you try to spot your support and resistance of the correction or flag, right? And remember, I usually start from the end to basically backwards, right? So this is a clear correction. It's really flat. It's a very horizontal flag, which is like an obvious scenario. You can literally see this is a bearish correction, right? So right now you need to somehow count your touches, right? In this case of a bearish correction, while looking for like sell setups, right? So in order to spot a sell setup, you need to trade the third touch on your trend line, right? Which is the highest probability. So in this case, you need to see how the structure is moving, right? Usually I would use a line chart to really see my touches, right? And the formation of this whole structure. So as you can see, the price went down, went up, creating our first touch right there, went down, went back up. That's the second touch, and onto the third one, right? So this method really helps me to figure out which touch is which. As you can see, this is the first one, even though it's like kind of uh, a double top or whatever. I count this as one touch according to the actual formation of this whole correction, right? So this is my second touch, and we have our third touch right there. So change back to this type of chart, and this really helped me to figure out which is which. So I'm just gonna quickly erase all of that and get back to the business right here. So this is our set. Let me just highlight it. Third touch right there. So now we know what we're working with, right? We know what we're working with. We're working with from this point right here. So this is where we're gonna base our sales from this point. So usually how I would enter, right? I would enter after a few candlesticks, right? So as you can see in this case, we had a nice rejection candlestick, right? A reversal candlestick right here. Perfect. Followed by a bearish candlestick. So this is very important. Two bearish candlesticks in a row for me is confirmation enough um to sell, right? So I would sell after the second candlestick when it closes. So basically the third candlestick, which is this one. So my opening will be right there, and I will trail down and just trail it to the any of the target points, right? But this is how it look. Go back to the hour time frame because I was in the 30-minute time frame. So as you can see, this pair has so much potential for a sell, right? But then this would probably be um the first target area, right? So that's how it would look. A sell from that point to here, which is roughly 2%. It's That's quite a lot. Most traders wouldn't even like hold to that point. Um, I wouldn't even hold to that point personally because there might be cases where the price just moves very slow and very like in a correction, right? So it could do this until it reaches that point, which will probably take weeks or whatever, days. But this is the setup with the British pound against Canadian dollar. Cool, cool, cool. So we can move on from this one. So this is the overall structure of it. It's cool. But remember, you need to follow the confirmation, um, candlesticks, reversals, whatever, to confirm that it's actually selling and not buying, right? So you need to pay attention to that. Let's move on to our second pair, which is US dollar against CHF. So this one is a bit choppy for my liking, like very choppy. So with this type of pair, I would usually just create like quick trades, nothing really lengthy, because as you can see, this is just a mess, right? You can end up waiting for so long for the price to like hit your targets and all your take profits, right? So we're just gonna focus on the current market, like what's really happening currently. Once again, starting from the 4 hour time frame, the first thing that we do is spot the structure, right? So in this case, it's where we have our resistance on our structure, and there you have your support, right? You can stretch this out, but it doesn't really matter. So you can see that we have a clear correction right there, clear as daylight. Can't lie and say sorry and say this is not a correction. That is like just so obvious, bro. And it's good to trade such pairs, like very simple, clean. Well, this is really not clean because the overall formation of this is just very choppy, right? But then in terms of our quick setup right there, you have your flag, which consists of 1, 2, 3 points, right? Uh, or touches, right? So this means it's a very good correction or flag or structure, whatever you wanna um define it as. But yeah, we're gonna focus on the third touch. Remember, third touch, highest probability. I can't stress this enough. The third touch will always have the highest probability. So it's what I focus on in terms of like taking trades personally, right? Personally. So from the 4 hour time frame straight to the hourly time frame. So I'm just gonna remove these to make everything look clean, right? So we need to focus on how the price is getting to the third touch right here. So I'm just gonna put a zone for you to literally see that this is um the third touch, right? Um, third, hold on, third. Damn, I'm so far away from the keyboard, so I'm trying. Um, third touch right there, and you can see the price got there correctively, which is a very good sign. And correctively, I mean this basically, right? It's didn't just get there in a old-fashioned impulse where it's just clear, straight up there. Nah, it got there correctively, which gives us more opportunity to like really dial down our our entry, right? So once again, I'm gonna start from basically the last point to the first point, which is backwards, right? So I'm gonna have something like this, and now you have your correction or your structure, right? So you can see it's the same concept. We still have one, two, three touches, right? It's still the same concept. So you're just doing something that you did in the bigger time frames and basically doing it throughout the smaller time frames, right? Third touch has the highest probability. And as you can see already, we are rejecting right there. The markets are, this is trading view, so some markets are still that they just open, they're running, but then with some brokers, um, they might still be closed. So we had a very nice rejection right there. So what we're waiting for with this one is a very deep rejection to the downside, so we can have some kind of corrective movement right there for us to base our entry off. So that's where I'm looking to enter if everything goes well, because I'm not really saying this is gonna sell. I'm just like, um, in case it does sell, right? That's how we would look for our entries. Um, yeah, this is it with this pair. Very simple, nothing complicated. And it's a very short um entry because we'll probably have the first target right there at the very base of this corrective movement to the third touch. So that would probably be the take profit and the final one because I really wouldn't want to drag it down all the way here and risk it basically turning from this point and just going back up, right? So this is the setup with US dollar against Swiss franc. Nothing really complex, very simple. So what we have here is a similar case to the previous one in terms of like it being very choppy, doesn't look really interesting from, big time frames. As you can see in the daily, it's nothing really interesting. Maybe apart from this point where you had your lowest low, it broke the lowest low right there, and basically it seems like it's going back inside to buy perhaps. So that's like the best I can come up with in terms of like interesting factors about this pair in the big time frames, right? Just keep this horizontal line in mind. So I'm just gonna remove it, but pretend like it's still there, right? Okay, cool. Dial down to the 4 hour time frame. Let's see what we have. So I'm not really gonna zoom out so much. We're looking for like quick setups that we can hold for a very short time, not hectic swinging like days and weeks or whatever the case may be. Just like maybe a week at best. Like, okay, cool. A week is so long, but like at best, in case something like that delays or whatever, right? Okay, cool. Keep in mind that we have the invisible horizontal line around these areas, right? And the daily. So I mean, don't forget, you should remember that we have the invisible horizontal support there, right? Okay, cool. Working with that, let's figure out our structure. So you can see the price from this point, it is bearish or descending, right? So what we know is, okay, cool, the structure should be within those principles, descending, right? So we're gonna have our support right there, as you can see. Now we visualize how it's a bearish structure, right? And in terms of a bearish structure, what is important is the support, not the resistance. So cool, let's draw resistance so we can have something like this. As you can see, the price sort of broke out, but we're gonna get into that later on. So this is our structure, right? Descending. Important part is the support. We have one, two, three touches, highest probability. So we should be focused on this part right here for confirmation on the direction of the market, right? Okay, cool. The price already rejected, gave us a clear impulse. That looks fine. So the price got itself into some kind of corrective behavior, right? And it really hasn't formed all the way out because if I go down to the 1 hour time frame, you can see that we have um false flags or corrections, right? You can see that it didn't just buy right there, literally broke that area. And it looks like it's retesting this area to the downside, which is, it can happen, could happen, it might happen, right? And if that does happen, it just means we're gonna ignore this setup because it definitely didn't play out if that happens. So usually in this case, I'll just uh leave this pair and let it play out because we might actually have a bigger correction, right? So something like this. So if it does form something like this, we're just gonna apply the same concept, which is the 1, 2, 3 touch concept, and place our entry at the third touch, which will be somewhere right there. So this is how this price is looking. First, first target right there. But yeah, this still has to, we definitely need to give it some time to really give us a clear direction on where it's going. Because if this is not the case and the first scenario happens where it sells, we will just need to readjust our setup and trade according to whatever the price gives us, right? Okay, cool. Moving on to euro against the Canadian dollar. Once again, 4 hour time frame is fine. Um, so here we have the price going up. It's bullish. It's a ascending structure, but this doesn't mean it's gonna go up forever. Matter of fact, it means that the price could turn, whatever the case may be. So in terms of a ascending structure, most important trend line is the resistance, because that's where we're gonna base our entries on. So that's our that's our trend line resistance right there. It's cool. Spot the support, which is that, and that's cool as well. Um, so this is really simple. It's just the previous setup, but then obviously um the opposite, because this is ascending, plotting for sell, right? So once again, need to count your touches. So there's 1, 2, and 3 basically, right? Third touch, which is this area, has the highest probability once again. And from the third touch, you really need to focus on what the market presents, right? So in this case, it presented a clear double top, which is confirmation that we're going to the downside. And we did. So in this case, our first entry could have been after like reversals on the second leg of the double top, right? So this part right here. So usually, okay, this is still in the 4 hour time frame. So let's just go down to 2 hour time frame, maybe. I mean the 2 hour time frame, yeah. So as you can see right here, we have um reversal candlesticks right there. And if we go down to the hourly time frame, you can see it very well that we have this candlestick right here. This is a reversal followed by a bearish movement. Um, so like I said previously, I would wait for two uh selling candlesticks in a row to close and then enter, right? So basically it will be this as the first one. Okay, let me just type this instead. Mm. So I would have this as the first one, and then this one as the second one. So after the second one, that is where I would place my sell. So at the opening of this candlestick, that's what I'm selling. And as you can see from that point, and for those who are wondering about like stop losses and stuff, I would set the stop loss at the previous highest high, which is this point right here. just a few pips up. Okay, cool. So you can see the price hasn't gone back. It literally just sold off. And that's quite a huge movement actually. Damn. Just based on the double top on what is considered being the third touch of the structure, right? First, second, third. Highest probability, and just look what happened after the double top. The price just literally took off. So maybe you would have entered here like before all of this happened, right? So you think, okay, cool, this is the third touch. The price um basically rejected, gave you this nice flag right there. Let's just zoom in to the 15-minute time frame. So you can see we had a nice correction right there, where you had your support of the correction and basically your resistance right there. So you can see it's still the same concept. You have your one, two, three touches, uh, reversals, and then you enter, right? So you entered right there. Okay, so this is how it's looking, right? You entered right there. Let's say you set your target to be at this point right here. So you would have something like that. And this is before all of this happened, right? So you're taking this as the third touch, which it is, and a clear flag right there with the one, two, three touch um, scenario to the downside. So cool, you were in profit until halfway, and the price literally just um, went back up, right? So to protect yourself, you need to set your stop loss, right? So remember, set your stop loss at the previous highest high, which is right here, the previous high, right there. So it's just a few pips. You need to sacrifice a small percentage in terms of loss for the great returns, right? So the price didn't go all the way down there. It literally stopped you out. And at that point, you shouldn't really give up on the setup because you can see that after all of that shenanigans, the price just created a double top and went back down. So the double top was you could have entered again right there after the price took you out right there. So that was basically this is the first entry that I would normally take. And then so right now you can see the price hit basically the target, the first target. And what is probably going to happen right now is a correction, right? So the price is just going to go sideways until it creates a nice correction for us to continue to the downside with our second entry at the third touch of the correction, of course, and till these areas, till the base of the structure, obviously. So this is how it look. And remember, and this is only gonna be executed if the market does present us with those the certain criteria that we have um for setups and entries, right? So if it does give us a clear correction right there with clear three touches on the resistance with clear reversals on the third touch, that's when we can execute. So this was EuroCAD, very simple. So we're gonna move on to the last pair, which is Australian dollar against New Zealand dollar, right? So the same concept applies. We're not gonna scale up to the daily. We're just gonna try to spot out what we have within these areas right here and trade according to that. So in this case, um, let me just remove this. We have the price kind of forming the structure right here, right? So we need to figure out what kind of structure this is. So we're just gonna start with the easiest part, which is the support. As you can see, that is just, it's obvious that's the support, right? For those who trade horizontal, no, resistance and support, you guys know that's the support. Sorry. Um, okay, cool. Since we have that figured out, we can just simply do the resistance, which is not really that difficult as well, but that's how the structure ended up looking, right? So you can't really tell whether this is a descending structure or ascending structure. So what you can do for if you really wanted to confirm, you can just basically scale up to the daily and see what's happening. So in my eyes or perspective, we kind of moving up, like an uptrend or whatever you want to call it, which kind of tells me that the price might, go up or continue going up since it was already going up. And that gives us some information on how to tackle this setup, right? So I'm just gonna zoom in to, or remember, let me just point this out. One, two, three touches on our support, which is amazing since we're looking uh for buys, right? So I'm gonna go down to the 2 hour time frame to see how the price is behaving around the third touch. Just hold on. So this is the third touch. Let me just highlight it. This is the third touch. And once again, we need to figure out how the price is getting to the third touch. So you can see the price is getting there correctively, right? Essentially, that is correction. Even though my drawing sucks, like right now, I don't have my trackpad is at my other place. So I'm just compromising right now. Trying to upload new videos and stuff. So this is what we have right here, and that's how we got to the third touch in terms of like a correction, right? Which is very good because we already had the nice impulse at the third touch with once again these three touches as well on the inner structure, right? So we also have these one, two, three touches, highest probabilities, the third one. So the price already bought since we couldn't capitalize off this third touch right here. But let me just zoom into it and just show you one of the reversals, right, that we have. So you can see the price lost some momentum, and you can tell by these wicks at the bottom right here. Because I'm using the type of chart I'm using shows me like it shows me the which candlestick whether the sellers or the buyers have more influence, right? So if there are no wicks, you can see where when it bought, there are no wicks at the bottom, which means there's very there's a great influence to the upside. And the opposite goes with the selling candlesticks. As you can see, they don't have wicks at the top, which means it still had some power to go to the downside, but then it was starting to reject since we have these wicks at the bottom right here. But that's really not very, it's not that important. What is important is this nice, perfect textbook, some may say, um, reversal, right? You can see, let me just remove this zone. So, oh, hold on, I removed the wrong, uh, okay, now that's fine. So you can see that we have um a nice reversal kind of stick right there. Some call it the doji. I don't really get in touch with the names or whatever, as long as I know it's a reversal. So after the reversal, we had a bullish movement, which was perfect, which shows that we are really reversing to the upside, right? So remember, I would only enter after two uh candlesticks that are the same, right? So in this case, in case of a buy, I would buy after two bullish candlesticks, right? So we have the first one right here. Let me get my arrows. So this is the first one and the second one. So after the second one, that's why I enter. So the opening of the third one is where I place my, my entry, and then my um stop loss. I'll put it right there at the wake of the turn of the market or the lowest point, and basically just shoot up. Um, I would normally have this as my first target right there, so that would be my first target. Because after this point, what I'm expecting is the market to either try to do this below this area or break out and then do it above it. But either way, the correction is where I'm gonna um base my second entry on to the upside, right? So I'll be looking at something like this from this point to the upside. Let me just scale up to the 3 hour time frame and have my second target at this level right here. So that is what I'm looking at with Australian dollar against the New Zealand dollar. Because we already had this movement, this impulse to the upside. So what we're waiting for with this one is a clear correction. Then we can continue placing our entries to the upside. Because I know for a fact, whoever saw this setup, who has the same or similar trading style to this, definitely took the risk entry right there to the upside, which is really paying off well because they probably hit the first targets or whatever. So this is what we have for this coming week. Um, these setups really look good. Very simple, nothing really complicated or very lengthy in terms of like swinging for months or whatever. Um, so let me just give a quick recap. The first one was British pound against Canadian dollar. We're looking for the price to continue going down with this one. Um, it's a very typical selling entry point. So as soon as my broker opens, I'm placing selling entries before I sleep. So this is very immediate. It's an immediate setup. By the time you guys get to watch the video, would have probably played out or something like that. So moving on to the second pair, US dollar against Swiss franc. So also a selling setup. Let me just remove this huge text. So it's a typical selling setup. Let me just scale down to the hourly time frame. So right here, we are waiting for the impulse to complete and the correction to begin. So we can start looking for entries right there. And then Canadian dollar against Swiss franc. This is this a descending structure, which means we're looking for bullish movements, bullish reversals, which we had around these areas. The price rejected the third touch, gave us a huge impulse to the upside, and now we're waiting for some kind of correction right there to form so we can look out for our entries to the upside. Okay. And then Euro CAD, Euro against the Canadian dollar. It's a ascending structure. We had this double top at the third touch of the ascending structure. Double top, nice movement to the downside. And now we're waiting for a correction to form and complete so we can start looking out for more selling opportunities with this one. And then Australian dollar against New Zealand dollar. Um, Here we have structure where the price rejected at the third touch of the support, 1, 2, 3. So this whole thing is the third touch and how the price got to the third touch, got there correctively, which also gave us 3 touches. 1, 2, 3, as you can see by the arrows right there. And the price rejected, cool, gave us a huge impulse to the upside, which we could have capitalized, but we missed it. So right now we're stuck waiting for um the correction that is gonna follow basically around these areas right here. And once that is complete, that's when we're gonna start looking out for more opportunities to enter for a buy to those levels. So that is what we have for this week. Um, if you've made it to this part of the video, which is probably gonna be like almost an hour long, thank you. Hope you liked the video. Make sure you subscribe and you can leave your comments. We do reply to comments as quickly as possible, so that will be very much appreciated. Once again, thank you to all our subscribers. Make sure you really subscribe so we can reach 20,000. Right now we're on 19,000 subscribers. So that will be like a huge milestone for us to reach. Please help us get to the target and make sure you tune in for the next video.